Welcome. We are about to get started with our webinar. Thank you so much for joining us this morning, this afternoon, this evening, wherever you are in the world. We are really excited to welcome you to our webinar. So greetings and welcome to the MiDA Advisors and Standard Bank hosted educational webinar series, Why Africa Matters, Unpacking the Rich Potential of African Investments. My name is Nadine Mentor-Williams. I'm the partner and senior managing director at MiDA Advisors. MiDA Advisors is a global transaction advisory firm that works with partners around the world to mobilize capital and execute transactions to strengthen the infrastructure in Africa and in other emerging markets. We have offices in the US and in Africa. We are pleased to host this webinar in collaboration with Standard Bank, the largest bank in Africa by assets. It is known as the Gateway to Africa. We collaborated to serve you, to make sure that we're educating you about the rich investment opportunities in Africa. We heard from you. We heard from institutional investors around the world that they wanted to learn more about what is happening in Africa. They wanted to hear more from different stakeholders around the world, and they wanted to co-invest with African counterparts. So here we are. This is our sixth webinar over the last 2 years. And over the last 2 years, we've been able to hear from key stakeholders in the African investment ecosystem. We have particularly focused on the contributions of women and women fund managers on the continent as we look to making sure that Africa stays a part of the global investment agenda. Today's webinar, we are really excited to focus on US allocators and how we can attract capital into Africa and into African women-led funds. This webinar today, we will hear from an esteemed panel of US allocators who have been exposed to Africa, who are interested in Africa, who've invested in Africa, and who also understands what institutional investors want and what they need, because they are institutional investors. This webinar is for educational purposes only and will follow Chatham House rules, and it will be recorded. Without further ado, we're pleased to welcome our esteemed panelists of US allocators. Taffy Ayodele is the Director of Diversity, Equity, and Inclusion, an emerging manager strategy for the New York City Comptroller's Office. In her role, Taffy drives the strategy within the Bureau of Asset Management, BAM, to expand engagement with and increase allocations to minority and women-owned business enterprises and emerging investment managers. She also oversees the Office of Minority, Women, and Disabled Veteran-Owned Broker Program and coordinates BAM's annual Emerging and Diverse Manager Conference. It is the conference to be at, so we hope that you all will attend the next one. I know Taffy will talk about it. Taffy is a seasoned executive with experience in the financial services, technology, and real estate sectors. Next, we have Byrne Buckley, who is the Deputy Chief Investment Officer for the City of Philadelphia, Pennsylvania. Byrne helps manage more than $9.7 billion in municipal pension assets and supervises over $2.2 billion for the city's deferred compensation plan. He has extensive experience in public fund management, investment strategy, and capital markets. Before joining the City of Philadelphia, Byrne spent nearly 2 decades in the private sector, managing portfolios for high net worth individuals. As a U.S. Army veteran, he earned the Bronze Star Medal for his service in Operation Desert Storm. Thank you, Byrne, for your service. Finally, we have Tiffany McGee. She's the founder, CEO, and CIO of Pivotal Advisors, an outsourced CIO here in the United States. Tiffany leads Pivotal Advisors in its mission to exceed client investment objectives and maximize their impact. Tiffany works with firm leadership to set and execute Pivotal Advisors' investment strategy, firm vision, and voice within the institutional investment community. She chairs the firm's investment committee, oversees investment research, and manages the due diligence process. She is the lead advisor for the firm's largest relationships. Pivotal Advisors is the first African-American woman-owned and first Afro-Latina-owned firm of its kind in the U.S. Tiffany is also a CNBC contributor. Welcome to all of our panelists. I hope you guys are ready for the next about 50 minutes. We are going to go deep into why Africa matters, how do we allocate more capital to Africa, and what are some of the challenges and some of the opportunities on the continent. So let's start off with our first question. What makes Africa stand out right now as a compelling investment opportunity for you? Taffy, will you kick us off?
Sure. Thank you, Nadine. And I'm just grateful that MiDA Advisors and Standard Bank has pulled this webinar together. So I will just start by saying that New York City has been really exploring the prospects of making Africa investments long before I started, which was only 3 years ago. I had the benefit of having lived on the continent for 4 years in Lagos, Nigeria, and briefly in Johannesburg for a couple of months. Um, but part of what compels us is the opportunity for both value and growth. I was researching what are valuations looking like today? Something like 20 to 30% cheaper than LATAM in Asia, right? And then you have all of the tailwinds of exponential growth around population growth, et cetera. And so as long-term investors, the New York City retirement systems now have 310 billion of assets under management. And we're global investors, but as much as we're global, we have not, made our way onto the African continent. And so if we're thinking about long-term growth, long-term value creation, and really an opportunity to be early movers in a market that is starved for capital, it would be a smart and I think strategic bet for us to make. So that's one piece. The other part of the why is we have uh, stakeholders like our trustees who have also visited the continent many times, way before I started my position at New York City. And they themselves have seen firsthand through site visits with companies and meeting with LPs right there on the continent. I was recently at the GEPF conference in Cape Town, and so when you hear firsthand from other LPs who are making wonderful investments and getting returned, I mean, alpha is the play for all of us. We want the return. So we know that if our pensioners want to see more exposure outside of just North America, Europe, and Asia, that Africa should be kind of the next market that we explore making investments into.
Thank you so much, Taffy. That was very helpful. And alpha is the play. And the fact that you've been on the continent and you're talking to others that have invested, that's part of the education and the fact finding. So thank you so much. Byrne, I'll ask you the same question.
Good morning, and thank you for inviting me to speak this morning with this esteemed panel. Basically, our pension fund and staff and our consultants have viewed, we have made an investment in Africa through DPI ADP3 fund after rigorous due diligence. And part of it is because we are currently, and this is public information, about 92% invested in North America in terms of our alternative investments. And that includes Canada, the United States, and Mexico. So to echo our colleague who just spoke about New York City, I share the views, or we share the views that Africa presented an opportunity from a value standpoint, but also from a future standpoint, because economically, Africa is the wealthiest continent in the globe. It is underdeveloped, if you will, in the sense of some of the infrastructure and things that we've mentioned before in our pre-meetings, but it has a great growth opportunity. Matter of fact, there are a number of countries in Africa that are going to become members of the G20 in the future here, in the very near future. So this is a compelling opportunity for pension funds, for managers, that have the foresight to do the due diligence and to put the work in. It does require work, but as I mentioned before, it's no more than what we have to do so far as investing here in North America or with a fund that is headquartered here in Philadelphia. It's the same exact process. And also, we have stakeholders who have traveled to Africa, have recommended it to us. We have staff and consultants that are very familiar with it. And personally, my own grandfather, who was daycare, lived in South Africa after he left Ireland a long time ago. So things are coming full circle.
Definitely full circle. And being able to say that, South Africa will be hosting G20, the next G20 summit, that's huge for it to be
Huge.
on the African continent. And so that shows that the global community is looking at Africa, and we don't want our institutional investors, especially those in the US, to be left behind. And so we are excited to have Tiffany on because we've heard from New York City, one of the largest asset allocators in the world. We've heard from the city of Philadelphia, and Tiffany represents endowments, foundations, family offices as an OCIO. Tiffany, really the same question. What makes Africa compelling to you as an OCIO?
Yeah, and first of all, thank you so much for having me. I'm really excited about our discussion today. And so, yeah, so when we think about Africa, we think about two things. First is opportunity, and the second is diversification. So I'll take opportunity first. So we think about the demographic dividend, right? So Africa is has the youngest population globally, right? So the median age, I believe, is like under 20. This really creates like a powerful long-term like consumer and labor force trend, which we really like. We see a lot of opportunity there. Structural growth. So really thinking about like the rapid urbanization, digital adoption, and this rising middle class. We think that those are really driving demand across sectors like fintech, healthcare, infrastructure, and also agriculture. And then, I think when we're listening to discussions around Africa, it tends to really what tends to really get talked about is the opportunity and like the growth, which yes, that's there. But for us, everything we do, and just to kind of level set, our most of our clients are foundations and endowments. We typically manage client portfolios with discretion. We have some consulting relationships as well, but that means that clients are hiring us to really develop their entire investment program. And so the basis of everything that we do is strategic asset allocation. So before we even select managers, we have to get the foundation correct. And so when we're looking at the needs of our client, we're using that to develop their strategic or long-term asset allocation. And so we always are looking for as an asset allocation specialist, I would say, we're always looking for opportunities to diversify the portfolio. And so we think about the diversification and return potential. Africa offers return streams that are less correlated to developed markets, and it really helps our clients, investors, manage risk and reduce portfolio volatility. That is the name of the game for us, right? Again, like Africa offers this like low correlation and really like high upside as well, right? So as a diversifier, Africa can really play a unique role in the long term portfolios, which are really what our clients are investing in, not in the short term, in the long term. And really, does this by offering exposure to frontier and emerging market like dynamics that are not really captured anyplace else. You're not going to capture that in a traditional benchmark. And then the other piece to this is for a lot of our clients, they are interested in having their investment portfolios aligned with their mission. That is a lot of institutions reach out to us for that specific reason. So we believe that the continent offers a lot of opportunities for impact aligned investing. So opportunities to align capital with purpose. So driving both financial returns and measurable social and economic impact as well.
That is very important. And I love how you talked about the diversification, how you talk about managing that risk in terms of a whole portfolio, and then also looking at, the return, but then also the impact. So
Yeah.
talking about return, I'm going to go back to Taffy. And Taffy noted in terms of being at the GPF conference, having some of the your stakeholders and your trustees have traveled to the continent. Can you share a little bit more about what the Comptroller's Office and what New York City has done to learn more about African investments, including co-investment opportunities? And why is that important?
So, over the past few years, we have um, really tried to focus on education, right? Part of why I think it's important for us to get everyone on the same page. Our investment office, most of the people there have not traveled to the continent, so they don't know firsthand. They haven't lived there. They haven't experienced going to a GEPF conference, which I think is one of the most world-class investment conferences run by the largest pension on the continent. Um, and so part of what I've done is pull together a couple of individuals who had conversations with our CIO, who are subject matter experts, who are based on the continent and have made investments, and just, to understand the investable landscape. In addition to that, we've met with some of the larger asset managers like the DPI, Helios, and a few others. Who have shared with us their own experience in terms of working with US institutional investors and some of the hurdles they've had to overcome to get allocations. And so that, I believe, has at least helped our team get to know a little bit more. 2 years ago now, I've been running our Diverse and Emerging Manager Conference, and Nadine, you mentioned it. We host a conference in February in New York City. You all are welcome to join us on February 11th at the Convene Brookfield Place, downtown Manhattan. But last year and the year before, we made sure to have panels, specifically dedicated to investment opportunities in Africa and invite our investment team, our CIO, for them to continue on in that education. And partially, and unfortunately, we had lined up our head of public markets to, attend a conference. I want to say it was last year. I think it was hosted by you all for MiDA, but with the USAID now backing out of a lot of these trips, it didn't make that trip possible. But our hope is to continue to have the dialogue, but move the dialogue to actual execution. And so my last trip, which was just last week to GEPF, sitting down with the leadership at GEPF and talking LP to LP about where they've seen success and how we could potentially work with them. The hope is that we can figure out some form of co-investment platform. Very early stage, so please no one run with this, but it's early stage of that conversation around how do we really turn this into real action. And there's nothing better than talking to another LP who's made investments, and it's their business to make those investments because they're based on the continent, and they too want to ensure that their pensioners' benefits are guaranteed. And so that's the hope.
I think that's great, Taffy. And the fact that they're on the continent, they understand the players of the continent, they have gone through the due diligence on the continent. And so being able to co-invest, that helps to address some of the questions that some of the LPs in the US may have about how do you do due diligence. And thank you for traveling to the continent because that's so important. And we've had MiDA Advisors has hosted 6 delegation trips to the continent over the last 6 years. And through those delegation trips, we were able to bring LPs, able to bring consultants, able to bring other key stakeholders and advocates to learn more about investment opportunities on the continent, to meet directly with the GPs, to meet directly with the other government officials, because people are also concerned about, the support of the government as well. And so it's been really tremendous to have the support of New York City, to have the support of so many other trustees and so many other CIOs who have traveled. I see that Angela Miller May is on as well, and she has been an advocate for Africa. We continue to say thank you for those who have gone to the continent and who continue to educate and share. Education is the first step. Relationship building, what you're doing, going to GEPF, which is one of the largest investment conferences on the continent. and ultimately leading towards mobilizing capital. And so talking about mobilizing capital, I think that's a great segue to Bern, who has actually mobilized capital, who has actually committed capital to the continent. And Bern, can you talk a little bit about how did you move from Africa's interesting, okay, this is interesting, to yes, we have made a commitment and we have fund managers that have been approved and passed through the due diligence process?
I'd be happy to, but I just will not say it was I personally. It was we. It was our investment staff, our CIO, Krista Fusco, and everyone here, as well as our consultants. We had started this previously when Torrey Cove, which has now been purchased by Axia, Matt Coyne was our consultant, who it had been asked by one of our stakeholders that we take a look at Africa. I myself and other members on staff do our own personal reading, and we thematically, for the reasons that our other members of this organization, this seminar have mentioned so eloquently, that Africa fit a number of those key points. It was a diversifier, it added value, but there was also alpha involved. And so as we started to do our due diligence internally through staff, we were assisted by our previous consultant who had already underwritten DPI ADP3 for the predecessor of the DFC. It's changed names. And we were able to review the report, and it was a compelling report. And so we then transitioned to Marquette Associates in Chicago, who are now our alternative consultants. We continued that dialogue. There are members there that have some expertise, if you will, in that region. And so it allowed us to have the confidence to continue to do our due diligence. And by the way, our due diligence process is the exact same, it doesn't matter whether it's in Africa or it's in Pennsylvania or it's right down the street here in Philadelphia. It's the same rigorous due diligence. You have to make it through the due diligence of staff, and you have to make it through the due diligence of our consultants. And then, so far as Africa is concerned, given my background in the military, I had some friends. I was able to make some inquiries, and based upon what they told me, it aligned with what we were doing. So everything came together, and then COVID hit. So the longest part of it was the legal review, where our city lawyers from the city of Philadelphia had to engage with the lawyers across the pond. In this case, it was a British law firm. Of course, we're separated by a common language. We had to learn English legal terms, which is different than the American legal terms that we're used to with alternative assets. We overcame that hurdle, and then we always do our investments when we bring people in front of our board. When we make a recommendation, we have all the legal docs done, and we made a recommendation for an investment in the main fund, and we set up our own co-investment vehicle for the same fund to run parallel at no fee, no carry. So we were able to reduce the fees, reduce the performance number, the management fee and the performance number. And so far things have worked out well. We made it through COVID, and we continue to march, and we just participated in a co-investment in Nigeria with a investment alongside other major sovereign wealth funds. And we allocated some capital. Our CIO signed off on it. We got the legal docs done. Again, it took some work, but we rolled up our sleeves and we got it done. And getting back to the point that we had mentioned before, the importance of the legal docs. At some point in time, it may be beneficial for everybody that is on this call, because I've received information that there is an African legal support facility at the African Development Bank Group, but we need to have those types of documents, especially the side letters and so forth, here available on our side of the pond, maybe with the DFC or your organization, whoever could support that. That it would be very, very helpful.
Thank you so much, Bern. And that is helpful. Thank you for sharing about the legal docs. And we will definitely work more with the DFC to see if we can get something that is more widely acceptable. And so that other institutional investors can have access to it and feel more comfortable. And one of the things you said in our pre-meeting and earlier is having the confidence, having more confidence and having more information to be able to move from I'm interested in Africa to I want to allocate into Africa. And so, with that being said, I'd like to ask Tiffany. We are talking from the U.S. allocators perspective, but there is a responsibility that African fund managers need as well in terms of how are they presenting, how are they coming to you. What are some highlights from your experience, some recommendations, or just some feedback that you have with regards to um, how African fund managers, especially women fund managers, what can they do to strengthen their pitch and to be successful during the due diligence process? Many of them have not necessarily pitched to US allocators, or if they have, maybe it's been limited. So, what feedback can you provide to help them strengthen their pitch and also be successful if they are able to go through a due diligence process with a US allocator?
Yeah, thank you. So I think it'd be good to start with what we look for in managers. And so I think Bern said it really nicely. Whether we're conducting due diligence on a manager in Africa or a manager in the US, the process is still the same. So some of the things that we look for is like, differentiation, like what sets your strategy apart in your market or asset class. Risk mitigation, how do you define, measure, and mitigate risk? And again, we're also thinking about these metrics as it relates to the overall portfolio for our client. Also, the investment process of is your philosophy clear? Is it repeatable? Is it grounded in strong decision making? And then, verification, like, can you back up your track record with like operational excellence or transparency or sound governance? And also like ethics and alignment. Do your like incentives align with investors? Like, are you guided by purpose and integrity? And the other thing I'll say too, for us, the qualitative is just as important as the quantitative. So, when you're telling your story, and we're really big on stories, lead with your edge, clearly, be able to clearly articulate your strategy's edge. What do you see? What do you see or do differently? And, don't assume that all allocators understand your market context. And also, be anchored in the why, right? So again, a lot of our clients are mission driven. In by the way, that's like a wide variety, right? That could be clients that don't want to contribute to issues that they see in the country or the world. Or so there's like, that's on one spectrum. That's on one end of the spectrum. But then on the opposite end of the spectrum, there are clients that want to have real impact. So be like mission aligned and data driven. So explain why you started the fund, why you serve, and how you deliver results. And then transparency is power. So be upfront about risks, limitations, and what you're doing, like to solve them. And I think like institutional investors really value clarity over perfection. I think a lot of times when we're meeting with managers, talking to managers, they feel like they have to get everything perfect in that first meeting. And listen, this is life, right? um, Ups and downs happen. We know this. We don't expect everybody to get it perfect all the time. And one of the questions that I asked, and Angela Matheny, who some of you may know, who's now working with our team, her favorite question is, "What mistakes have you made, and what have you learned from them?" And so we love that because there's going to be a time where you are going to fail. Every manager, even the big ones, get it wrong at least 50% of the time. So you know, understanding why you got it wrong, understanding what worked, what didn't work, and what you're doing differently is incredibly valuable. And we really look for those anecdotes and stories. And then I would also say institutional readiness. So understanding the different client types, right? So there are clearly pensions, as we can see on this call, but there are also foundations and endowments, and there are also family offices. And so those are three distinct client categories, institutional investor categories, and understanding their needs is incredibly important. So, having strong compliance, operations, and reporting infrastructure really builds trust. And I think the allocators are like assessing, more than just performance. They're looking for that strong operational infrastructure. And then case studies matter. So, like using real world examples to demonstrate your process, your portfolio construction, ability to navigate through market conditions is really important. Again, we love stories, and then own your narrative, especially for like women-owned fund managers. Confidence, clarity, conviction, those things are critical. You belong in the room, full stop. And so your lived experience is really a value add. It's not a disclaimer. So I think that's really important to understand and really internalize. And then also, ask questions. Due diligence is a two-way street. Don't be afraid to ask, investors about their goals and their timelines and their priorities. And I'll just end with this. I think the strongest manager meetings that we have been the ones that really understand us and our role as it relates to our clients, and that try to be helpful to us. So understanding that we approach everything from an asset allocation standpoint. So for example, if you are a venture fund, knowing that we're not going to have 40% of the client's asset allocation in venture, knowing that that might be 5%, right? Just making some numbers up, and understanding what we're looking for in that venture category. Is it early stage? Is it a little bit more later stage? So really understanding our role and how we serve clients and our process is very important, and it goes a long way to kind of cutting to the chase and getting to the point and not spinning your wheels.
I think you just did a master class in how do you present yourself to institutional investors. So I have to like snap it up, snap it up. That was beautiful. I was taking notes, and yes, so many people are like, "Is this going to be recorded? Is this going to be recorded?" Yes, it is being recorded. The recording will be shared. But this is so important because this is why we have different voices. Appreciate Burns' voice as they have allocated, they have worked with their consultant, they have identified, and they have done add-on co-investments. I appreciate Taffy's voice because Taffy has been to the continent. She is working with key stakeholders. It's not easy to move from an idea to actually commitment, and Taffy is working very hard with so many different stakeholders, including Larry Bosley, who has traveled to the continent many times, to make sure that there's something that happens with New York City in Africa. And so we appreciate your hard work. And Tiffany, what you're doing as an OCIO, especially working with endowments, foundations, and family offices, and making sure that you're educating yourself. And then you're also reaching out and meeting with those fund managers. And so if there are fund managers who are on and listening, and we know that there are many fund managers who are in Africa right now listening, especially women fund managers. You heard Tiffany, you belong in the room. She said 3 C's: confidence, clarity, and conviction. And your lived experience is value added and not a disclaimer. I love that. And I'm going to use that again, Tiffany. I just want you to know. I will make sure to give you credit when I use that. So I'm going to give you credit. But it is so important because you belong in a room. You belong in this global investment community. You don't just have to pitch to African pension plans. You can come and connect with, this is part of why we're doing this. So now you know Taffy, now you're connected with Bern, now you're connected with Tiffany. They're all on LinkedIn. I'm sure they're okay with me saying that. But it is great for you to now make these connections and you're hearing from them, which is amazing and really important. So thank you for that. We talked about some of the opportunities. We talked about some of the things that the fund managers can be doing. What do you think are some of the challenges, Taffy? I know you've been working hard at this for a long time. what are some of the challenges and what are some of the feedback in terms of why Africa has been a concern, and how do we address that? How do we overcome those to go from a concern to, we've addressed this and now we can commit capital?
The biggest concern in New York City, unfortunately, happens to be the complexity of the New York City retirement systems. And I don't want to bore our attendees with the history of our office, but in short, we invest on behalf of 5 separate pension systems, and not all 5 have conviction around, emerging markets. And so again, that's why I've focused these past 3 years really on education, understanding just the basics around why is this an investable universe. The second area of kind of friction that I've seen is we kind of went pretty deep with 2 or 3 managers. And where I see the pushback that I'm getting from our investment teams, it's a well, you know, eh, how do we actually get our money out? You know, how, this looks good, it sounds good, but how do these returns translate in terms of US dollars? Um, how much risk are we really taking? So that perception of additional risk is real to a lot of US institutions like New York City who do not quite understand that for a lot of the managers that we've met, if they've structured unique investment opportunities where there could be first loss with a DFI or just really great co-investment opportunities. And so my kind of pitch has been, let's figure out how to start in a way that makes our investment teams a little bit more comfortable. But I think where we need the next hurdle for us, it has to be, and this is the idea around working with GEPF, I think they need to hear it from another pension. And Bernard, I might just drag you into our office because maybe they need to hear also from another US pension that has made an investment. And I think a lot of times when folks think of emerging markets, right now, the focus has just been on Asia. Not even as much on Latin America. There's been a lot of focus on Asia. And so if there are other institutional LPs who've made the investments, who are willing to have very open conversations with us, I think that'll help us get over this hurdle. But, you know, this is why MiDA Advisors is also important. You all have been great about getting us answers to some of the tough questions that we've had around how do we exit currency devaluation and the like.
No, I appreciate that. And thank you for your just being honest about some of the challenges. And these are real challenges.
I,
And
I will add one other. Sorry, this is probably one of the biggest. I should not forget this. The consultants, right? So Tiffany is rare, where she has actually done the work and met with managers and actually diligence track records. Our current slate of consultants have not necessarily done that level of work. And so the concern there is if there aren't consultants that are willing to do that deep dive, then we don't have uh, any basis to present to our investment committee, right? We can't move an investment forward without a recommendation from the consultants. So how do we mitigate that risk? Maybe we need to hire consultants who have covered Africa as an investable universe.
that's so important. That is so important. The education, consultants being willing to be educated. So consultants being willing to understand and connect with other consultants. And I know, Bern, you mentioned your consultant having that experience and being willing to come forward, because even if you have the advocates and if you have certain trustees and stakeholders, if the consultants are not on board, that can really stop or hinder the process. And Taffy, we will definitely connect you more. Since the last 7, 8 years, we've helped to mobilize over $2.5 billion into the continent and working with quite a few institutional investors. I see Terrell Gamble is on as well. We know Chicago teachers have invested. We know that there have been quite a few different institutional investors, as well as foundations and family offices that have invested. And what we try to do is create opportunities for you all to come together. So you all to talk, you all to hear from each other. So it's great that some of them are listening so they can hear from some of your concerns, and that they can hear from the Burns of the world who has invested, and some other institutional investors, CIOs, trustees that are on, and to know that people have invested and they're pleased with their returns. And so, Bern, I would ask you the same question that I asked Taffy in terms of some of the challenges, and how do you think you were able to overcome some of those challenges?
Right.
And I just want to let the attendees know that the Q&A box is open. So if you have any questions, please type it in the Q&A box, and we'll start answering those questions in a few more minutes.
I'll be happy to, Nadine. If I can make a point of order, I don't have the authority to invest. I don't have a vote, so I want to. It's our board that has the full authority to vote. It's our CIO, with myself and the other staff, Krista Fusco, and the other staff, that can make a recommendation, and we do the presentation. But ultimately, it's up to our chair and our board. So that's a testament to our chair, our board, our CIO, that they were willing to consider it, and not only to just consider, but to vote unanimously to affirm that recommendation of both ourselves and our consultant. And if I could further, before I answer your question, further to a thought came to my mind. By the way, Taffy, I'm a Fordham grad, so I'll be happy to come up to New York anytime. This is really, Africa now has become a national strategic asset for the United States in terms of its mineral wealth, its resources. So if I could just point this out, because I think that consultants going forward are going to hear a lot more about that, and the importance that Africa plays in the vision for the United States. I don't represent the United States government. I'm just reading, and from what I hear. So I think the stars are starting to align now. And I think when the federal government finally gets back to work, then this may be an opportune time for added emphasis for the consultants to get on board, because now it's not the risk of investing in Africa, it's the risk of not investing in Africa. So that changes the entire dynamic of the conversation. So now, there are still some hurdles that have to always be overcome, and the hurdles are the exact same ones that I mentioned before. So it's rigorous due diligence on a legal front, and also Tiffany made an excellent point so far as values. Make sure that there's an alignment so far as values. I will also make a recommendation to our friends that are actually in Africa right now that are looking to enter the American market. I would do a little research on each state in the United States and find out what companies do business in Africa and which countries do they do business in. Because oftentimes there will be an alignment there, or some information that is exchanged between pension funds and other departments in government, especially at a state level, that may be very beneficial to know as people network. That's another thing that I wanted to mention, the importance of networking in a positive sense, getting in front of the decision makers, and not just to talk about numbers and how great your fund is. I sat next to a gentleman when our daughter was doing swimming, is doing swimming. He's a retiree, he's a grandfather. His granddaughter, he moved back. His wife is from Botswana. So they moved, he retired, and the grandchildren now are in Botswana with him. He's on the board of a major pension fund in Botswana. And he and I sat together for 4 or 5 years at swim meets for 4 or 5 hours each meet. And I had dinner with him. My wife and I had dinner with him at Christmas, and we were asking, and I found out how his granddaughters and grandson are doing. His granddaughter swims for the national team at Botswana. His grandson is on the golf team. He goes all over Africa. The granddaughter goes. There's a connection there. There's something that our children can be doing here. Why not think outside the box about setting things up where we can build a bridge for the future generation, so that when Taffy is thinking about trying to bring people in to speak, well, maybe somebody on the trustees or so forth has a grandchild that has gone to Africa on a swimming event or a golf event. There's a connection there. And I would make the recommendation that that be something that was put on the agenda for the future talks as well.
No, that's great. That's great. I always say you want to meet them before you need them.
Yes.
So,
No, you're spot on.
yes, all the time. So, in the interest of time, and this has been a great information, we do want to make sure that we hear from the attendees, and there's some questions, and we want to try to end right at 11:30 because I know a couple of you have to run on out. So, we appreciate the hour that you're giving us. A lot of great feedback in the Q&A. You guys are amazing. They're saying this is really informative, really helpful. The attendees really appreciate the feedback. One of the first questions that was received is, was the co-investment vehicle that Byrne mentioned GP-led or LP-led? Meaning, does the manager form and manage that SPV, or is that a creation of the LPs?
That was our creation. So which ended up being the most time-consuming part of the process because of the it's a Pan-African fund. I'm not speaking out of turn. I don't represent Runa or Joanne from DPI for ADP3, nor their law firm, but our legal team had a lot of hurdles to overcome because it's a Pan-African fund.
Yep.
And Africa is so complex, the continent, it's so large. It's so large with multiple different legal systems and jurisdictions that our side letter had to be very fine-tuned.
I appreciate that. And the fact that you took the time to do that, the fact that you took the resources and the legal team, that is a testament to you and your team for making sure you prioritize that, because I know there's a lot on your plate. And this is also important feedback. Taffy, Tiffany, Byrne, they have a lot on their plate. You know, Africa is a small piece of everything that they're doing. And so sometimes we hear this feedback from fund managers that maybe they email Taffy or they email Tiffany or they email Byrne and we don't hear back from them. They're not interested in Africa. It doesn't mean that they're not interested in Africa. It means that they're trying to put out fires all over the place every single day. And Taffy's talking about, you know, the Bureau of Asset Management. Taffy's talking about all the different trustees that she's dealt with. Byrne and his very, you know, City of Philadelphia is a unique organization that he's always being tasked to do something. And so patience, you know, investing in Africa is a marathon, not a sprint. It doesn't mean that they're not interested, and doesn't mean that they're ignoring you. It means that they will get to you when they can. So patience. And that's just not just Africa, that's across the board with everything. So I just want to make that in protection of our panelists because they're amazing people. The next question that was asked is, what are the bright spots in terms of sector themes that funds are focusing on in Africa? And I think from your perspective, are there specific sectors or themes that you are more interested in when you're looking at Africa, or asset classes?
I'll start. I think for us, we've been looking primarily at private equity, as well as real estate. I forgot to mention on our first GEPF trip with MiDA Advisors, our head of real estate attended, and since then he's been looking for an opportunity to invest. So that might end up being our first investment, which might end up being real estate. And then also infrastructure, obviously, like that's the obvious one that everyone is clamoring around. But I would say those are the three. We don't currently invest in venture capital. I saw a question around venture capital. We don't even invest in venture in the US yet. That's another fight that I'm fighting, Nadine. So would love to also explore venture in Africa.
This is great. Thank you. Tiffany, for your clients?
Yeah, so I think kind of going back to what I was saying before, the foundation of everything we do is asset allocation. So we're looking at the client's needs, and then we're looking at how we can get there, how we can achieve those needs based on the asset allocation. So we're top down in terms of asset allocation. But we do pay attention to certain themes, right? So of course, just like all over, AI is driving everything, so you really cannot ignore that. But I think specific to the continent, and the demographic of Africa, I think, and I mentioned this earlier, like this rapid urbanization, like this digital adoption, and really like this rising middle class. It really offers some opportunities in areas like fintech and like infrastructure, agriculture, and healthcare. So while we're not specifically seeking out things in particular sectors, we want to make sure that we understand the environment, and that we understand where the environment, the trends, and where the opportunities are, so that when we meet a manager, we get it. So Nadine, I loved what you said. What did you, I forget how you phrased it. You want to meet them before you need them. We want to understand the landscape and really understand that really well before we meet them, and definitely agree with meeting them before we need them as well.
Great. Thank you, Tiffany. Vern, from your perspective? And any very early stage pre-seed, that was also part of a question as well.
No, for us, it's more, well, we have obviously our board and our consultant review the staff review the asset allocation every year. So far as we're concerned, we're open-minded. We went with a private equity investment, and who knows what the future is going to hold. No one has a monopoly on good ideas, but if someone has a good idea, and they have the confidence, they should show it to us. And again, it has to do with networking and the approach, because we do get bombarded. As you were saying that, I received 4 text messages and 3 emails, so that I have to respond to. So and I would recommend to anyone that is listening, that is outside, that may be hesitant, to just be patient and be persistent.
2 great P's, patience and persistence. Max Mercer V, who was with Mercer, has been a big advocate for Africa. We co-wrote several publications educating about Africa, and he's, as a former consultant, he made a great comment that it's so important to gain the consultant's perspective. So I'm so glad, Tiffany, that you mentioned that, because we need that education. We need the consultants. We might have a consultants roundtable as another one of these webinars. So that's an idea. First-time fund managers. I know we talked about pre-seed. Any first-time fund managers that you're open to? You never know. Anyone?
I'll be honest, that might be challenging for a new region. We do first-time managers in the US. I think it's going to depend on how we structure our partnership locally, if we do it or not. But I love first-time managers in general.
Anyone else? Tiffany, Vern?
I'll say really quickly. So we do love first-time managers, and I have this story, and I'm always hesitant to tell it because it depends on the room. But sometimes it goes over well. Sometimes people click it. Sometimes it clicks with people. But there was a Preqin study that came out years ago that talked about emerging managers, first-time funds, and why they do so well. And so I kind of start off. I'm a huge hip hop fan. I love Jay-Z. Hopefully, there's some Jay-Z fans listening. And so Reasonable Doubt was arguably one of his best albums, arguably. And so it was one of his best albums because it was his first album. And so that's how we think about first-time funds. We think about, we always say that we're never going to invest in someone who worked at, I don't know, Walmart for their entire career and woke up one day and said, I'm going to start a fund, right? That's not going to happen. But typically, when you look at the profile of a lot of first-time fund managers, they were sitting in somebody else's shop making or helping to make investment decisions for a long time, for their entire career. And so they've gotten, that's really, we consider that an apprenticeship. So they've gotten a first-hand seat, a front row seat at what worked, and more importantly, what did not work. And so then they get this opportunity to spin off and to start their own fund. And so they bring that knowledge with them. So we have to consider that, right, in the process. So that's why we really like, we do like first time funds. But again, depending on the client, the client type, some institutions can't do that, and especially in a new region. Or a newer region to a client, transparency and operational due diligence becomes very, very important. So, we definitely want to get there, but sometimes there can be those challenges, especially in a place that, if you're sitting in the US and have not been to the continent, which I have not, and I can't wait to go. But I think I'm a little bit different. We're a little bit different in terms of how we think. But for a lot of, investors sitting in the US and have never been over there and to them it's kind of other, it's a little bit hard to think, okay, well, what happens if, and how do we mitigate this? And so, that's one of the things that we try to help clients. We want to have these discussions to kind of educate clients and, also learn along with our clients as well. And to Tabby's point, Nadine, MiDA, I think, really kind of comes in and helps to kind of facilitate that as well.
And I appreciate that. And one of the things that we really try to work with our partners globally to educate and to address those risks, working with the United States government, working with the World Bank and other organizations to introduce and incorporate risk mitigant tools within some of the transactions that we've been able to bring to the market. So it's important. It's imperative in terms of how do we educate, how do we make people more comfortable, and how do we move the needle to Africa being perceived as being very risky to actually implementing and allocating capital into Africa. There were a few questions about how do you present to investors, or how do you differentiate yourselves? I think all of the panelists, including Tiffany, did a great job really talking about that. And this will be recorded. So I encourage everyone, if you have that type of question, to listen to this again, because there was a masterclass, a lot of great nuggets in terms of how do you present yourself to US investors. So I'm going to skip over that in the interest of time because it has been answered. When we talk about what's attractive attractive returns, what is considered attractive? We haven't really talked about returns and terms when you're looking at Africa. What's considered an attractive return? Anyone wants to answer that?
I'll take a quick stab and I'll be brief. So I think, and we were talking about this on the prep call. Yeah, I think when people are talking about investing in Africa, they're talking about the alpha and the opportunities. And so that's great. We all know that those are there. Again, what we're looking for, yes, definitely alpha, but we're also looking for diversifiers within the portfolio. And I think that, if you're solely talking about alpha, right, outperformance and the opportunity, I think it puts a little bit of undue stress, I think unfair stress on those fund managers to outperform every single thing. It's like, listen, not every manager is going to outperform every single time, right? So let's just be realistic. So for us, we're not looking at a fund manager saying how much over the benchmark did you outperform. What we want to know is, first of all, are you in line with your asset class? Is it doing what we want it to do, right? So in a portfolio, we need certain things to zig while others are zagging. So is it doing what we wanted it to do? Is it fulfilling its purpose? So yes, we want everything to outperform, but logically speaking, not everything in a portfolio not every single asset class is going to outperform all the time. So I just want to kind of like level set and say that. So I know you're probably looking for a number. I don't have a number for you. And of course it depends on the asset class, but we're always looking for, market or above market returns, but it really is in terms of, what it's bringing to the overall portfolio. And also, We're also comparing things to the benchmark and to peers, right? Peers are very important as well. So we do those, and when we do our quarterly reporting, we are comparing. We are looking at attribution, right? How much of the performance of the entire portfolio is attributed to asset allocation versus managers, but we're also looking at how those managers compare to their peers, as well as the benchmark, which I think is really important.
That's helpful. Thank you so much. Bern, is there a range that you look at? Was that something that excited you?
Well, I'll say this: our board is meticulous in terms of and very granular, as is our CIO and the rest of staff and our consultants. So our standard is, I'll just say that our standard or our expectation for a manager in Africa would be the same as we would have here in the US. So I would say that to put their best foot forward, to do the absolute best that they can. And there are other things that we consider as well, not just performance. I would also emphasize the importance of integrity and reputation, because that is something that without integrity, without a good reputation, you're just not going to get through the door. You can have the best numbers in the world, you can outperform, but if we don't like you, if we don't trust you, you're not getting the pensioners' money.
That's so important.
And that's the same for anyone on this side of the pond in the United States. And believe me, we've turned a lot of people away that from here, from the US, that for one reason or another, they just weren't a good fit.
Yeah.
And so I would highlight again the importance of persistence, but also the importance of integrity.
I think that's a life lesson for anyone.
Yes.
Anyone in whatever you do, that's
Yes.
a life lesson. So thank you. Thank you. In the interest of time, and we have gone over, but this has been such a dynamic discussion that no one wanted to drop off, and there was a lot of questions. But there was a question about AUM. I would just say that, again, there's a range. There's a range. I know Tiffany has larger endowments and clients, family offices. She has smaller ones. So there could be a range. There could be opportunities for smaller firms to come and get a smaller allocation. There are bigger allocations. I know that Taffy, New York City, they allocate large blocks. And so they're not going to necessarily allocate 5 million or 2 million. But again, there's different appetite for different institutional investors. So being open, and I think one of the message here is, come with your best foot forward. Come and show your strength. Come and show your value. There is enough funding in the world for everyone to really come and present. But also, this is very encouraging for each of the panelists to say that they are either very closely assessing Africa for investments or have invested in Africa. And so I think the door is open to send information. Their email, their LinkedIn information is out there. And please, we want this to be a continuing education. And so if there's opportunities, if you have reports, if you have information that's helpful for them to share with their stakeholders, send that. The more information, relevant information about Africa, the better informed they can make a decision. So I want to say thank you to our amazing panelists. You guys are incredible. Thank you for your time. Thank you for the prep call. Thank you for our attendees, for the questions. Thank you we have institutional investors that are listening from around the world. We have consultants that are listening from around the world, and we have fund managers that are listening from around the world. But especially for our fund managers in Africa, our women-led fund managers, there's a place for you at the table. There's a place for Africa in the global investment agenda. And we want to continue this conversation so we can mobilize more capital. So on behalf of Standard Bank Group and MiDA Advisors, we want to say thank you. And this recording will be available. And again, this recording and this discussion follows Chatham House rules. And so thank you so much for respecting that. Thank you.